What if I told you that earning $100,000 a year in America no longer guarantees financial security? 50 years ago, a six-figure salary was considered wealthy. Today, nearly half of Americans earning over $100,000 say they're living paycheck to paycheck. They're not buying yachts. They're not flying private. They're not living in mansions. Yet every month, after all the bills are paid, they stare at their bank account, wondering where it all went. So what happened? How did a salary that once represented the American dream become barely enough to survive? And more importantly, why does it feel like you're working harder than ever while falling further behind? Today, we're uncovering the real reason behind America's six-figure illusion. Let's start with something nobody tells you when you get that $100,000 job offer. You will never actually see $100,000. The moment that paycheck is generated, the government moves first. Federal income tax, state tax, Social Security, Medicare. By the time the money reaches your bank account in 2026, your $100,000 salary becomes $70,600 to $78,100 per year. That's $6,166 a month, not $8,333, not $100,000, $6,166. That's your real number. That's what you actually have to pay rent, buy groceries, fill the gas tank, and build a future with. And here's where it gets painful. The average American household now spends $6,545 every single month just to live. You bring home $6,166. You spend $6,545. You are negative $379 before you buy a single thing you enjoy, before one vacation, before one emergency, before one mistake. The math is broken before you even start. Now here's the part that should be on the front page of every newspaper. There's a tax the government doesn't call a tax. It doesn't show up on your W-2. Nobody sends you a bill. It's called inflation. And since 2020, it has quietly stolen 24 cents from every dollar you earn. That means the $100,000 you make in 2026 only buys what $80,000 bought just 6 years ago. Your salary number went up. Your actual life got more expensive. But here's what makes it worse. Inflation didn't hit everything equally. The things you can cut, coffee, clothes, entertainment, those went up mildly. The things you cannot cut, housing, up 50% since COVID. Childcare, up 39% since 2019. Healthcare, rising every single year. Gas, over $6 a gallon in parts of the U.S. right now in 2026. These aren't luxuries. These are the walls of your life. And they've been closing in, slowly, quietly, for 5 years. Right now, 57% of American consumers say high prices are actively destroying their personal finances. Not struggling, not uncomfortable, actively destroying. Nothing shows this more clearly than housing. A generation ago, buying a home was hard. Today, for millions of Americans, it feels impossible. The median home in America right now costs $400,000 to $17,700. To buy it, you need $83,540 up front, just for the down payment. Do most Americans have $83,540 sitting in savings? No. But let's say you do. You get the mortgage. At today's 6.6% interest rate, your monthly payment is $2,134. Before property taxes, before insurance, before a single repair. Add those in, and you're paying $2,700 to $3,000 a month. That's nearly half your entire take-home pay, gone. Just for a roof, financial experts say housing should be 25% of your income. In 2026, the average American is paying nearly double that. And renting? Not the escape it used to be. New York, $3,800 a month for a one-bedroom. San Francisco, $3,600. Boston, $3,200. Even Austin, the city people fled to for affordability, over $2,100 a month now. Housing didn't just get expensive. Housing became the wall between the people building wealth and the people feeling broke. Then comes debt. And this one is silent. You don't feel it all at once. It arrives slowly. A student loan here, a car payment there, a credit card for the furniture, another for the emergency you didn't plan for. Before you know it, part of every paycheck you will ever earn already belongs to someone else. Here's how bad it has gotten. Total U.S. credit card debt crossed $1.252 trillion in 2026. Lending tree. That is not a government number. That is not a corporate number. That is personal debt. Carried by ordinary Americans. People like you. The average American household now owes $11,507 in credit card debt alone. Wallet Hub. And the average interest rate on that debt? 21% per year. Do the math. If you carry a $6,000 balance at 21% interest, you are paying $1,290 every single year just in interest charges. Elite personal finance. Not paying down the debt. Not buying anything new. Just interest. Just the price of being in debt. Month after month. Year after year. Quietly draining wealth you haven't even built yet. And here's the thing. Nobody teaches in school. In 2025 alone, Americans paid $253 billion in credit card interest and fees. $253 billion. Paid to banks. For the privilege of spending money they didn't have. That's not bad luck. That's a system, perfectly engineered to keep you one step behind. Because here's the brutal truth. It's not how much you earn that determines financial freedom. It's how much of what you earn you actually keep. And for millions of Americans carrying debt at 21% interest, the answer is not much. Now here's the one that nobody wants to admit. Lifestyle creep. Here's how it works. You earn $60,000. You drive a Honda. You live in a small apartment. You watch every dollar. Then you get the raise. You hit $100,000. Suddenly the Honda feels embarrassing. The small apartment feels tight. Home cooking feels like a punishment. You upgrade the car. You move to a nicer place. You order DoorDash 4 nights a week. And every extra dollar you earned? Gone. Before it ever had a chance to become wealth. A 2025 Goldman Sachs report found something shocking. 40% of Americans earning $500,000 a year, $500,000, still say they're living paycheck to paycheck. $500,000. Paycheck to paycheck. Because lifestyle creep doesn't care what you earn. It scales with income like a shadow. And social media makes it 10 times worse. Every day you're shown luxury vacations, designer wardrobes, dream homes. You compare your real life to everyone else's highlight reel. And suddenly, $100,000 feels inadequate. Even though, globally, it remains an extraordinarily high income. The problem was never the number. The problem is the psychology. Now let's talk about the real game being played. The one most people don't even know exists. While you work for money, the wealthy own things that make money. Stocks, real estate, businesses, investments. When you go to sleep, your paycheck stops. When a wealthy person goes to sleep, their assets keep compounding. And in 2026, that gap has never been wider. The top 1% now controls 32% of all wealth in the United States. Wealth inequality in America is at its 60-year peak. Here's the K-shaped economy explained simply. Imagine drawing the letter K. The top arm goes up. The bottom arm goes down. If you own assets, stocks, property, investments, you're on the top arm. Inflation barely touches you. Your net worth keeps growing while you sleep. If you work for a paycheck and own nothing significant, you're on the bottom arm. You get all the inflation, all the rising costs, none of the gains. This is why two people can both earn $100,000 and live completely different financial lives. One bought a home in 2019. That home is now worth 50% more. Their net worth grew by hundreds of thousands without working a single extra hour. The other is still renting, still saving for a down payment. Same salary, completely different trajectory. Income creates cash flow. Assets create wealth. And in America today, wealth increasingly comes from what you own, not what you earn. So what do? First, understand that feeling broke on $100,000 is not a personal failure. Consumer sentiment in America just hit its lowest point since 1952. Lower than wars, lower than recessions, lower than pandemics. The system is genuinely harder than it has ever been. But here are 3 moves that actually change the equation. Number 1. Budget around your real number. Not $100,000. Not $8,333 a month. Your actual take-home. $6,166. Build everything from there. Number 2. Automate wealth building before you can spend it. Every raise, every bonus, every tax refund. Before it touches your checking account, route 50% to investments automatically. What your brain doesn't see, your brain doesn't spend. Number 3. Start owning instead of only earning. It doesn't need to be real estate. It can be index funds, a small business, any asset that works while you sleep. Because in this economy, the gap between earners and owners keeps growing. Every year you delay getting on the ownership side is a year that gap widens without you. Here is what nobody will say on the news. The American dream didn't disappear. It got repriced. A home that cost $150,000 in 1995 costs $417,000 today. A college degree that cost $20,000 now costs $120,000. A dollar that bought a dollar's worth in 2020 now buys 76 cents. The rules changed, the prices changed, the system changed. But nobody updated the promise. They kept telling the same story. Work hard, earn 6 figures, and you'll be fine. While quietly, the cost of fine kept rising. So no, you are not bad with money. You are not failing. You are living inside a system that was never designed for you to win. But here's the thing about systems. Once you understand them, you can stop playing by their rules and start writing your own. That's what Wealtho is here for. Every week, every video. One less trap, one more step forward. Subscribe. And let's build something real.